fellow Dodger fans? Any Dodger fans in here? I know that we all are a fan of dodging bad trades. Hi, John, Glenn, Kevin, Craig, welcome to Face. And we do record every session. You'll find it on our YouTube page. Hello, Emma, nice to meet you. How's everyone doing today? Zig, Windsor 99, my old friend from FX Street. I want to thank all the people that have followed me around all these years. Not easy to keep up with, you know. I'm kind of like a baseball player that's on a different team every few years. We'll see if we could change this and I could finish out my career here at ForexAnalytix. That's my preferred trade. Okay, so how's everyone doing? I just want to show you an example of why people pay some money. I'm like a kicker. Yeah, Zig, I am, man. I'm like, you know, I get hot. You know, they give me a good contract, then I choke, and they trade me, and you know, then I go on to be a high school coach or something, huh? Anyway, on this big update that we had in Canada, you know, I remember we were all together and Blake was on, had the mic, and we watched the news together and Canada exploded, and, you know, it was surprising to everybody after moving sideways like this that we'd have a big move like this. But you know what? This chart by Grega was already drawn for a move like this up to here to where we are. I mean, you know, and this is just one of them this week or in the last 5 days. Grega, I want to tip my hat to you. I know you're not here, but he stuck to his guns about being bearish Aussie, still bearish gold. You know, he came in here Monday and said, you know, they're still expecting much lower prices in Aussie, and definitely accelerated that trend yesterday. So anyway, we're near this level in Canada, so should be on your radar screen. Even if you're not a subscriber, this is an example that we're ending 4. Now, you know, I'm not an Elliotician, but I know that a lot of Elliott guys, they don't even like to trade 5s, you know. But if it is going to be a 5, even if it's, listen to this, Steve Olge, a 5th wave failure where it really doesn't even take out the low, but there is a scenario in Elliott count where it's truncated 5th wave failure, that's still an awful lot of pips from up here. So, you know, I don't know exactly where his line in the sand is, probably up here, the bull bear line, probably up around 28, but just wanted to show you that, you know, you had this in advance as a subscriber before we had the big explosion on Friday. So, you know, you may have thought, you know, Greg is looking for 27 and he's got this labeled as B. Why not take a shot? You know, and you could have been long for this, but now we're completing up here. So, you know, use whatever your methodology is. You know, guys, I look for divergences. I actually see it on Canada now. We could take a quick look at Canada. But I also have one other lesson I want to share with you guys from like one of my mistakes. So look at this. So this is the 1 hour. We've gotten to above 27. That's a 4. So pretty strong momentum up here in the 4, but getting a decent candle. So, you know, like we talk all the time, you don't have to go all in on this, right? Because maybe it's going to take some time to do some distribution up here. Could go to 750, but you never know. And that's my lesson. The lesson today is you never know. this candle can end up being it. So you have your toe in the water. Everyone with me on Canada? With what Grega was looking for and what we're seeing right here. Still a lot of real strong momentum. I don't even think I'd call this a divergence on the 4 hour. See if the 1 hour, it's still from this peak to this peak. We're still diverging. It's not ideal to me because it's over 70. I like divergences under 70 where it shows momentum has waned. Oh, there's Bank of Canada today too. All right, so don't do anything until after that is my advice. Or light, you know, toe in the water in case it is an inflection point. Thank you, Eric. But here's a lesson for today. Okay, and it's not easy to do. It's actually kind of a pro move. And it's not easy to make pro moves. Like I consider a pro move when a trader gets taken out of a trade. You know, they have their stop, they're out, but they still like the trade and they can recommit to that trade. Okay, sometimes I'd say 80–90% of traders, once they get stopped out of a trade, they'll start looking around at different instruments. Give me a Y if that describes you. You go, oh, I've had it with I've had it with Canada for a while. Come on, I've heard myself say it. All right. Well, a pro's not going to take it personally. You know, the instrument didn't do anything personally to the trader. Their timing was off a bit. Yeah, you're very offended by an unsuccessful trade. I know, that bastard. It was those algos and black boxes. They got me. But you know, on Monday when I was talking about maybe we'd have some risk off this week, you know, and I was talking about all the N crosses, and I was talking about Aussie and gave you guys a target of, it was on the 4 hour where I had confluence between the 50 and 200 moving, you know, it's down here. So from up here, that was a nice trade, right? And, you know, this area where these moving averages intersected was kind of my target. But this is the lesson. You never know, right? So, I mean, actually, when you look at this, it started to look like a head and shoulders. If it took out this low, it would measure another 80 pips. That's exactly what we got. But the point is of that you never know is that you always keep a piece on. Because traders, we need these candles. You know, this was the tough money. This was the easy money. The only thing that made it difficult was not wanting to have any exposure anymore. So I'm going to help you with it. Okay, I'm going to help you with this. So say you took the trade and we're down here and you're near targets and you're going, should I keep a piece on or just go the door and move on? This is how you'll be able to stay with the trade, and you may even want to write it down. And this is not original material. I learned this from someone. I've learned a lot of what I'm teaching to you from others. So you're looking at the trade, you've got 50, 60 pips here, you're trailing your stop to BE or profit stop. But before you get rid of everything and you're short a market like this, ask yourself this question. Is this a market that I would buy and get long? Okay, so if your answer is it's not compelling enough for you to want to buy it and get long, then that's enough reason for you to stay short with a portion of your position. Everyone give me a Y if you understand it. Who's written that down? You're in a position, you're thinking about covering everything. If you're long, you ask yourself, is this a market right here that I would short? And if you're short, you ask yourself, is this the question I would get long? Are you asking me why you asked that question? Yeah, and you should have answers about why you would reverse. And they better be compelling, and it better be more than one reason. Well, it hit a 50-day moving average. Okay, so that's my mentoring for the day. I guarantee if you start asking yourself that question, yeah, well, you know, then they're out of control. You know, if you're doing this for adrenaline and for a rush, you know, you may as well join the opioid epidemic, okay, because it's destructive, okay? It's destructive. So I want to wrap it up with the yen and the gold again. On Monday, I didn't want to short the yen, but I figured it could come back, and it did fill the gap right here. I'm getting pretty glaring divergence up here. I wouldn't do any crosses because of the ECB. It makes me want to just, you know, have the pure play in the yen. S&Ps look like, you know, Blake showed a flag yesterday, and I think they took the flag out. So the yen looks negative to me up here, and the other side of the yen trade was the gold, and the gold diverged down here. Here's your 4 hour, certainly starting to look like a 3 drive to a bottom formation. You have your risk at under the, with everyone else here, under 1260. And we still could do a little more work on this. That's a 4 hour. So, but you have real nice divergence. My RSI disappeared, but I'd be looking for something, maybe one more push down. You know, I think it was Grega who talked about big round numbers. He missed a trade. He didn't go with the big round number. He missed it by a few pips. Go with big round numbers. So I think there's a chance that we try the big round number of 1270, you know, 68 possibility. And I would give it a shot with stops under the 1260 level. Because I know there's a lot of bearishness, and again, Grega was so right about Aussie, but usually I think it's the gold that leads Aussie, not the Aussie leading gold.
Hey, Dale.
But yeah, that's about, okay, thank you. I was starting to ramble.
No. I was gonna say, if you want to get your RSI back, you see that blue thing in the corner.
Yes.
No, go back on the chart.
Yeah.
Okay, now go to the right. Click that. Yeah.
Oh, wow.
There you go.
You know, Blake, it's only been 7 months. I'll have it.
You know what? That happened to me a few months ago. I'm like, where the hell did my RSI go? And I sat there for like 10 minutes trying to figure it out. So. And
you know what? I want to thank you from the bottom of my heart, because you know how attached I am to RSI.
Yes.
So you know. That was a humanitarian gesture.
Good morning.
Hey,
morning.
Stevie.
I have a faster tip for you. You can double left click on your chart and the RSI goes away, and if you do it again, it reappears.
Oh my God, it's like magic.
I guess it does, doesn't it? Yeah, I guess it does. All right, I just did that. Yeah. It's another trick.
Anyway, what do you think? I know that you pay a lot of attention to the loonie, Blake. So I'm wondering what you know what you're thinking up here. If you think that we're getting close to this being completed, or if we get maybe an S&P sell-off and that bear flag was right, that there's more left in USD CAD to the upside on some risk aversion or something.
Yeah, well, the thing is, you know, I think with the Canadian here, let me take over the charts with the Canadian. You know, that move that we saw this morning was just really a a stop run just ahead of, you know, the Bank of Canada. I mean, that's what I think this move was that you see here.
Okay.
I think the dollar Canadian really does look bullish though. But you know, we're gonna leave a long wick here ahead of the BOC decision. You know, even on the 4-hour. But you know, there's a couple things working against the Canadian currency. First of all, the BOC is going to be a little bit more less hawkish. They're probably going to be a little bit more dovish. And we had
because the real estate market is starting to soften a little bit.
The housing market's definitely starting to soften. The retail sales, the consumer spending is down a little bit. Inflation data print that we got was it last week? It was a little weaker. You know, so I doubt that the Bank of Canada is going to be too hawkish. So the problem that the Canadian has for it at the moment is that the market is still very long Canadian currency. I mean, so if you think about this move here, the market's still pretty lopsided long. So I mean,
it's amazing that they've been able, that it hasn't created liquidation.
No, I'm surprised, and I think a lot of people are still, for whatever reason, holding on, you know, longer term, that they think that the structure is bearish, which it could be.
Greg's wave count, that it's a 4.
Well, you know, it could be, but the problem is that the BOC changes its tune a little bit. You know, if we squeeze past this 127.70, I mean, it's gonna. I mean, we might see close to 130, and so I want to bring up a chart. Excuse me. I want to bring up a chart that I'm really paying close attention to. If you didn't catch it last night, the pound really
ripped.
It ripped. Yeah, the GDP numbers came in strong. And look at the pound Canadian. I mean, we have, you know, this is a daily, but this is a longer term chart. I'm gonna highlight a couple of things. You'll notice that we have a higher low here, right?
Yeah.
And now we have this inverted head and shoulder pattern, and we're testing the neckline. I mean, we could very easily be trading back at 175. Even if you think, oh, this is just a big range.
Yeah.
Well, yeah,
Nice.
that may be a big range, but we have a lot of room between here and here. So the pound, let's go over to the pound really quick. And
Lydia's going to be here, the cable queen, you know.
Oh yeah, Lydia is going to be here, and so she may talk about this. I mean, I want to point out that the cable, and I'm so upset because I didn't get my pound dollar long filled overnight. I had a buy, you know, I have a bid out at 1:30. Matter of fact, I might as well just cancel it. Let me cancel my order.
When did it happen? Like at 2 in the morning when you finally got to sleep?
No, it happened whenever. Yeah, I guess it was about 2 o'clock in the morning. 1:30 when the preliminary GDP numbers came out. But I was hoping for, you know, maybe an inline print or a little weaker print to get us down to 130.60, and then I was going to be long. Fortunately, I'm long the pound New Zealand, and if anybody is long the pound New Zealand, I did take a fifth of my trade off. I have been long since 186 and change. So I'm up about 500 pips in this particular trade. You can see the pattern in play. It's you know, 187. We're trading at 192.72. So it's up quite a bit.
Is
but
this
anyway,
one of these campaign trades for you, Blake? I know you talk about 3-4 times a year. You know, when you really think you have something going, you kind of put the pedal.
Yeah, this you know, is defining my quarter at the moment. So you know, yeah, I mean, I'm looking for 196, 197 up here. You know, we're still, I mean, we're getting overbought, but we have been more overboughter. So so you because you can imagine we can get more overbought here, and then by the time we get to, you know, a little bit more overbought, we can then at that point in time, you know, start to diverge but still move higher in price. So yeah. I'm not really worried about the pound New Zealand.
Actually, it's a sign of strength. People, you know, 80 readings, you know, are, you know, it's not a fade. It's confirming how strong a market is.
Yeah, right now it is actually confirmed RSI strength because we've actually pierced the other high. Yeah, so
a lot of
yeah, a lot of momentum here, and I still think it goes higher. I mean, I still think we trade up towards 196, 197. But I did peel off portion of it, and you know, and I adjusted stops and all that fun stuff this morning, which is good. But I'm you know, upset because, and by the way, I also picked up the pound Aussie last night. If you guys are in the chat room, you knew that last night. But also, here's the pound Aussie. I'll show you when I picked it up because I posted this in Asia last night. Right, this pivot off this trend line support, I bought a little bit here, and I was going to buy more above 170, but I'm like, I'll buy it tomorrow morning versus putting in an order. So when I got up this morning, you know, it's up another 170 pips from where I picked it up, and I just peeled it off. I just took it off the table, but I am a buyer on dips now because and those people that were in Asia last night in the chat room know I picked up the pound Aussie down at you know, 169.30 something. You know, we're trading at 171. Anyway, we took out this downtrend line, which is huge. I mean, that's a multi-year downtrend line. So now I am buying on dips. So I've got orders to buy below the market. And I think this looks extremely bullish. So you know, we got some pretty decent moves setting up in these pound crosses that especially with this pound Canadian. If we have a Bank of Canada that's a little dovish, I mean, the pound Canadian could be very easily trading at 170 today. You know, you factor in the strong news out of the UK, and then, you know, some weak Canadian, you know, Bank of Canada movements, and you know, you got a pound Canadian that can move another couple hundred pips. It is a very, very fast moving currency pair that can move several hundred pips in a day. So
plus you could hold it, Blake, without any, you know, any type of impact from Draghi tomorrow.
Yes, that is correct, because you know, you got to be careful with Mario Draghi and company. It's happening tomorrow at the ECB, and what he may do, and that's a correct assessment there. So anyway, the pound is obviously on the move. The pound looks, if you look at the pound dollar, I mean, we've got a really huge triangle. I mean, this is you know, years worth of data. So there's a 2014. You can see big downsloping trend line that doesn't come into play until, you know, 135, and then you've got you know, very, very strong upsloping trend line that comes in near where we were at yesterday, but obviously we're back in because of the data, we're back in the middle of the range, and it's going to be interesting to hear what Lydia has to say regarding the cable a little bit later, because I know that's her focus. And also when Stelios gets here, I'm sure he's going to have a few things to say about the pound, because remember, the Bank of England meets, I think it's next week that they meet, and you know, we're now expecting a rate hike, and with the stronger GDP numbers, I think that's probably you know, really fortifying that idea that the Bank of England is going to start raising rates. So that's going to be really important for the cable, as you can imagine. You know, the couple other things that were there, you know, that I know I'm looking at. Here's speaking of a multi-year triangle. Here's the dollar yen, and you can see the dollar yen is at the top of its triangle near this 114.50 level. It's a really, really big resistance, and but you know, stocks are really strong, you know, so we haven't we haven't seen the dollar yen back off. We'd have to see, you know, really stocks start to move lower, and we'd have to see bonds start to bounce. And if you look at the bond market's still extremely weak. I mean, here's bonds. Here's the 10-year. I mean, look at the 10-year continues to dive, you know, nosedive. And as that 10-year, you know, 10-year is obviously very oversold at this point, and I would assume that we get a bounce today. But who knows? I mean, the bond market's really been under pressure, and you know, we could see, you know, further slide in bonds, which is you know, rise in yields, and the rise in yields is impacting the dollar yen and all the other yen pairs and making them go higher. So for the most part, unless you're trading the New Zealand yen, which the New Zealand yen is just bearish because of the Kiwi. And I know I don't. Grega had a chart. I hadn't seen it, but he had he's very, very excited about the Aussie dollar and its bearishness. The only thing I want to mention here about the Aussie, and let me see if he posted something on the Aussie. Let's double check. I'm not sure if he did. Elliott Wave.
He's up and good. He's up and good.
He's really good. So he's looking at, you know, wave 5 pointing towards let's just call it 76 cents here, and that was
it's a 4-hour. Check the daily. It shows the biggest structure.
Oh yeah, okay, towards 75.40. So he's looking at thanks Steve. And you know, if you look at this Aussie dollar, the only thing I'm worried about at this moment is that we have the 200-day moving average that may give it some temporary support with the divergent relative strength. But I don't know. You know, the Aussie does look like it wants to move lower, and it's playing a little catch up to the Kiwi, because the Kiwi is just, you know, obviously
Blake.
Continue to get.
Sorry to interrupt, but since you had the daily chart of the Aussie in front of you.
False breakout.
No, of the Aussie, the daily chart. You know, this can also be interpreted as an inclined head and shoulders formation up there, right?
With a real weak right shoulder, Steve?
Yeah.
Well, here's the thing. This is what I don't like, and I'm going to be very clear here on head and shoulder patterns. Okay. Yeah. When you have the neckline cocked towards the movement, in order for the Aussie to achieve this move, it has to go all the way down to 70. That's a huge drop. So whenever I do a complex head and shoulder pattern, I like it to be going, you know, it's going to be counter trend to the current movement. So it'd be like this, because then the target area is not really without a reach. This is a very, very aggressive target, and I don't know if that's really achievable in this down move, but you know, that's me.
Well, those are the waterfalls, Blake, the acceleration phase that, like, you know, I was talking about earlier. You know, if you're short at the same time, if you're short Aussie, you have to ask yourself, is that enough for you to want to get long? So, you know, and Greg has shown so many channels, and Steve too, where you get acceleration through those lines, you know, throwovers or accelerations. And, you know, that's where the big money is. And we all need those because of our mistakes.
Yeah. And really quick, before I pass it over to Steve, we do have durable goods orders coming out, so we should pay close attention to those. We have durable goods orders, and then, actually that's all we have, which will be a bit of a market mover. So, so that'll be covered out, and the yen, as I mentioned earlier, the yen's right up against resistance. We might make another stab at these highs, but I would assume that 114.30, 114.50 is going to be really, really big resistance for the dollar yen. But again, it's really all this move is predicated on the bond market, so we got to pay most attention to the bond market. Yeah. And so, okay, here we go. We're about 30, 20 seconds away.
Hope everyone refied when we saw the bonds were going to take a hit. Not going to see those mortgage rates again.
No, you know, we're at very, very, very
Low. There it is.
All right, here we go. That data came out, let's see, pretty strong actually.
2.2%.
Yeah,
You
strong,
said good
strong.
already,
Yeah, look at the dollar yen just spiking up again. You know, just, and I'm sure bonds are weak. Yeah, strong data, very, very strong data point. So
yeah, the month-on-month 0.7 in comparison to 0.5. September 2.2 versus 1 expected. So yeah, better data.
yeah, good data. So and stocks are not really responding. There's just mostly the dollar at this moment. All right, Steve. So good morning. How are you?
Good. How have you been? Did you manage to get any sleep after the Aussie data?
Oh yeah, of course. Yep. Yep. I got some sleep, and I'm going to get ready for the trading day. So I'm going to pass it over to you.
Great. Okay.
All
Enjoy, mate. Good luck.
Good hunting. Hi, Steve. Did you
Hey.
like the Tom Terrific cartoon, buddy?
Yeah. Where did you get that?
I got it off YouTube, but it was one of my favorite cartoons as a kid. It's like every time you had a great idea, that hat looks like a tinfoil, aluminum hat, smoke would come out the top. So, you know.
Okay. By
like
the way,
that. You're like
by the
that.
way,
Huh?
thank you. By the way, let me remind that in 1.5 hours from now, we not only have Canadian data, but we also have U.S. home sales. Okay, so this is another print that we should watch. Okay, of course it's not that critical, but it is now having to do with the USD CAD. I just want to briefly have a look at it. Blake said the most of it. I just want to remind that, you know, initially after we got the rebound, I expected that either this zone or that zone is going to hold. So I'm also inclined to remain bearish as long as the 128 zone holds, and that would mean, for example, that you know, some hawkish BOC would definitely help this pair rollover. And on the other hand, because we also have the CAD yen, it would also perhaps help the CAD yen break higher from this with what appears to be a corrective channel out of the inverted head and shoulders formation. Okay, so another well-positioned pair for that is the Aussie yen. On the other hand, Blake mentioned about the pound Canadian, and he's right about it. The pound Canadian is probably one of the best positioned in case we do see weakness for the Canadian dollar. So I think, you know, we definitely have two pairs that are looking really good, you know, in case we have a strong reaction from the Canadian dollar. And Blake mentioned the pound CAD, which, you know, is a very good candidate in case we get you know, weak Canadian dollar. Now, on the other hand, we had talked about the USD yen. It's, you know, it's resuming higher, and with today's move in the cable, which I'm not going to go so much into it since Lydia is going to be here. I'm going to let her talk about the cable, but let's have a discussion once again about the pound yen. Okay, the pound yen, as we had said, and we had written in our blog post as well, was one of the best positioned pairs to you know, to enjoy any further yen weakness that would come. And that's exactly what's happening, because, you know, we had this major trend line, we broke above it, we came back, we retested it, the corrective move lower was clearly well behaved, and now we're accelerating higher. So, you know, what I was expecting back then when we were having this discussion is still valid. I mean, I can easily see a move back to 156.50 perhaps. Okay, so this keeps moving according to plan, and Euro yen is also moving according to plan, but
Good calls on the crosses, Steve.
yeah, thank you.
You never relented on being constructive.
Yeah, the charts told me to do so. You know, it's
Well, you know,
now,
charts say different things to different people. So, you know, it's your eye and the way you interpret it that.
yeah, okay, that plays a role,
okay.
but sometimes, you know, if you know, some things are rather objective. Some other things, I agree with you. It's a matter of interpretation. I mean, somebody can be seeing, for example, you know, a constructive pattern, while at the same time somebody might be focusing on something that looks like more bearish.
Yeah.
Regardless, what I have to say is that obviously, if the ECB does not manage to weaken the euro tomorrow, this thing is going to accelerate and head a lot higher from here. So it's definitely going to satisfy, you know, the new highs, which we're probably going to see today anyhow. And you know, it's very likely if we see, you know, a strong reaction from the ECB to see it tomorrow be at 136, 137, you know, easily. So you know, I think this keeps working according to the plan as well. On the other hand, though, we have to say that we had a technical event in the Kiwi yen because it finally actually closed below this ascending triangle trend line, and this is a very bearish development. Would I be short immediately? You know, I'm thinking about it. I might get involved if I see something like this. And the pair I definitely want to get involved if I see a pullback. I mean, I desperately, you know, I barely kept myself from buying it yesterday. Is the Euro-Aussie, because with yesterday's weakness, the Euro-Aussie finally also broke above this flat top triangle, and this is a very bullish formation. So any move back to 152 and change, 152.10, I think it's, you know, it's a move that can easily be bought, because this is a huge technical event. I want to see the daily candle, of course, close, you know, strong, and you know, then I'm a buyer, and I think that this can also head at least up to this 161.8, which is at 157. That's like, you know, if we, especially if we get that little retracement, that's going to be 500 pips higher, right? RSI is also looking like it's confirming, because it's breaking. It seems that it's going to break this descending trend line that, you know, it had been capping it as long as this triangle was in play. So in my opinion, and I said it yesterday on the chat room as well, when we were having a discussion a little bit before the RBA, not the RBI, actually, the CPI, I mean, I said that this is one of the best positioned currencies, and the other one is the Aussie USD, because the Aussie USD had given us, and I want to go in a longer term chart as well to show how significant this break was, had given us this area, the 7740 area, which it had only recently reaffirmed its importance by rebounding off there. Okay, why is this area significant? This area is significant simply because it was the area that was capping any bullish attempt from the Aussie USD for many months. Okay, and you know, if you also want another trend line, we can perhaps extend this one a little bit. There we go. And this is another trend line that coincides with the 200 DMA, and you can call this like a last area of support. And you know something, this area might hold actually, and then produce some type of a pullback, trap people thinking that this was a false break before resuming lower. But I'm also in the same camp that, so in essence, what we were expecting back there, if you see lower, higher, lower, happened exactly. To be honest though, I didn't expect the rebound to be that high. I expected it to be more shallow. Anyhow, the idea was right, the extent of the rebound was not right. So I'm looking to be short the Aussie USD once again. I remind you, I was short this pair. I took some profits there. What was 2 weeks ago? And I'm
hard to expect perfection at the crap table, my friend.
Oh yeah, I'm not even worried about that anymore.
Well, I know, but I'm just saying. I know you. I think at times, you know, you do because you're so good. You know, you move on, but you know,
we all have good and bad days.
Aren't you kind of a perfectionist type of person? I know you're a detailed person. You know, kind of like you expect a lot out of yourself.
I'm very much a perfectionist, but you know something, actually, coincidentally, we spoke about that yesterday. We had a discussion on the chat room late at night about levels. And, you know, I was saying that I believe more in areas than specific levels, because that was exactly what I was mentioning, that even if you're a perfectionist, trading does not offer perfectionism. I mean, you can say that, oh, I have an interesting level at 0.74328, you know, so yeah, it's going to go to 0.74328, and you know that's not a thing you see in trading.
Yeah,
so,
because all your levels have a range in them.
Yes, exactly. Because you know, if you try to catch moves by the 5 pips or the 2 pips or the 10 pips, you're constantly going to be getting disappointed, because you know the fluctuations do happen for various reasons, and
you're not going to have any hair left anyway.
yeah, for sure. Stelios already has no hair left. I don't know if that played a role, Stelios.
I wasn't going to say anything, man, but I guess his best friend can. Huh?
I can hear you. I'm here, man.
I know. I see you.
And yes, Steve is as much as a perfectionist as I've ever seen anybody.
That's why I brought it up. I wanted to do a little, you know, shrink work on Steve, but yeah. But because it would be hard to overcome having that type of personality to, you know, just be able to just move on when things don't work out exactly as planned. You know what I mean? It's just psychology. But Steve has accepted, even though he's that way, that it's not possible to do that in here.
It's not.
So
it's not possible.
Cool.
Yes.
Okay, I don't need to see you anymore. Your time is up.
Now, having to do with the Kiwi, there is absolutely no question that the Kiwi is in a wave 3. You can even see this like a 1, a 2. You remember that specifically we had mentioned that this looks like a 2 because of its nature, the nature of the correction. And I think there is nobody that can doubt that the move that started from up there can now be characterized as impulsive. Just simply put, besides the fact that it has broken below the channel, I mean, Greg mentioned that yesterday, we have moved within 24 trading days, that's roughly, let's say, a month, 7.5% lower. That's an extreme move for a currency pair. Okay, especially one of the popular ones. I have to say one thing though, be careful for a short-term bounce potential, because as you see, this area is both horizontal support, which you can see from me zooming out how important it is. And, you know, we also had this ascending trend line that can perhaps play some role. I don't think so much, so I'm going to make it like this. So be a little bit careful, because at some point, either from here or from a little bit lower, from there, we can see a rebound that ideally I would want it to see it stop at this area, the 0.6970 area, in which case I'm going to be reselling Kiwis for a move lower. I think there is absolutely no question that the path of least resistance remains lower, and in my opinion, people should not be trying to fight this weakness. they should be trying to align with it, because I think it's not over. I mean, the first rebound should not be bought. The first rebound, at least the first rebound, should be sold. Okay, so let me make that very clear. Now, I see that we have some questions about Euro Kiwi, and one of them has to do with that because I mentioned it yesterday, and here it is. Euro Kiwi is, wait. Yeah, now I know why analysis is missing, because that's the wrong area. Euro Kiwi, there it is. So Euro Kiwi is now at the channel resistance. Obviously, this is an important area, and obviously after being overbought, this can produce some type of a pullback that is definitely going to produce a buying opportunity. Needless to say, being less than 24 hours from the ECB, perhaps the ECB gives us this opportunity, or perhaps the ECB creates an event in which this price action overthrows the ascending channel. I'm not a magician, I can't tell you in advance, right? I can tell you one thing for sure. If I was a scalper, I might be looking to sell here if it wasn't for the ECB. So, you know, personally, I'm not going to be doing anything with it. If we get euro weakness down to this area, then I'm going to be really tempted to be a buyer. I can tell you that much. Okay, so I have no plans of doing something with it now, but perhaps if the price action, plays according to the chart, I'm going to be interesting to be a buyer in the near future. So that's all I have to tell you about the Euro Kiwi. I didn't mention it because I think it's more than obvious from what I said. Buying up here makes no sense. I don't mean that it might not work, but where's your reward to risk ratio? Where would you put your stop loss? And how far higher would you be looking until you have a pullback? So, you know, buying up here is absolutely, completely opposed to any kind of criteria I have as a trader. Okay, I'm just saying it for anybody that may be interested. Let me see more questions. Steve, you were in the middle of saying you were looking to sell rallies. Yeah, I've shown that now, Catherine. Whoa, Zar, have I missed some news? Let's have a look at it. Oh, you haven't missed any news. It was an impulsive move. It gave us a correction to retest the broken triangle. I actually bought that there, but I was greedy and took profits at 1.7% higher because I wanted to fund my indices short stop loss. I wanted to get that out of the way because, you know, I consider being short the indices in advance like a losing trade, because that's how you need to approach fading such a strong move. And, you know, that's it. So about the USD ZAR, I have nothing to tell you that besides the fact that it remains constructive. So, you know, we broke decisively above there. We retested the triangle. So it remains constructive. And just if you zoom out, I think we can get rid of these fibs and draw some new fibs, and let's make them, since you're asking about it, let's go from here to there. There you go. Next target, simply put, is 38.2 at 1440. If you see, this also kind of confluences. As you see, this is an area that has indeed been of interest in the recent past. So this is what we were expecting. It never came back then, it came back later. The good thing is that I was long here as well, and I took profits because, you know, the market protected me by showing me this very clear, ascending wedge. And I think that we can easily head there. Of course, that doesn't mean that it has to happen like this. It might happen like this. Come back, retest, you know, the area of this high, and then push once again higher. For example, I can see a 1, a 2, a 3, a 4 perhaps then, and a 5th, something like that. Okay, so because this clearly shows that it has the potential of being an impulsive move, a 1, 2, 3, 4, 5, okay? So keep looking higher in the USD. It's as simple as that. Zach, by the way, saying USD move, it's a mini budget that was announced. Okay, sure. I mean, it's interesting to know the background, although in some cases the chart does all the talking for you. You know what I mean? We have a friend asking about the Euro Turkish lira again. Yeah, Abdul. Okay, nothing much to say about it, mate, since the last time we talked about it, simply because nothing much has changed. I mean, it remains bullish. We're still above this wedge. The wedge, if you look at it in the short term, it's a megaphone formation if you look at it in the long term. And we are about to retest the 161.8 again. Obviously, this is now make it or break it depending on what happens with the ECB. We still have a gap that hasn't been filled, this one. So perhaps a more hawkish ECB than expected can help us fill that gap. But regardless, for me to turn bearish this pair, I definitely need to see this trend line, this red trend line, break lower, and hopefully the 416 level as well. That's why if you see the down line that I have here starts from that area. Okay, so until or unless we break below there, I think that you can attempt fading the move higher, but make sure that you do it with very calculated risk, because the trend is not with you. There is no question about it. Gap in copper went down last night but never touched that levels. Michael is saying, let me see. For copper, I'm actually using this instrument to monitor it. So I don't have gaps. But regardless, I can tell you one thing for sure, which is going to help you in whatever you have in mind. Copper is currently in a fourth wave, okay, from this move higher, most likely. So this is either like some kind of a bear flag, a bull flag, sorry, my mistake, or it currently looks more likely that's in a triangle. Bottom line, if you remember, I talked about a move lower here. It happened, it transpired. But honestly, I wouldn't be looking much lower from here. I mean, at the very worst case scenario, a little bit lower, but it looks to me like the next move is higher once again. And likely, it's not going to even go lower from the lows we saw overnight before it moves higher. Okay, because...
Carry on. I just wanted to ask after you're done with copper something, so don't worry.
Go on. I don't have much else to say. Okay. I think it remains constructive. I think it has at least one more move higher before a deeper correction. So that's it. I mean, I covered it. Tell me.
Okay. No, I was just going to say, I have a friend who's asking me about platinum, and he was asking if we have any short-term technical views. So have you looked at platinum recently at all?
There you go.
Wow.
Let me see.
You're shorting it up there.
Let me see. Okay, platinum, I'm not really looking from what I see in the chart. I just have like some very basic, triangle that I was monitoring here from the breakout. But as you see, platinum remains extremely weak. And
in the old days, and everyone knows I'm old. Platinum always carried a premium over gold.
Yeah, and now that has gone away a long time ago, actually, which is very weird, isn't it? I mean,
I don't know why it did, and now I don't know why it doesn't. I just know that
well,
it's weird for me to see.
In terms of scarcity and all that, platinum should be higher than gold, and that's why historically it was. But I'm actually surprised. I didn't realize it had gone below the price of gold. for
Oh
over a
yeah,
year, over
long
a
time
year
ago.
now.
Yeah.
I never traded
Yeah,
it.
maybe
That's
it's
why I don't
maybe
look at
it's a
it.
comment. Maybe it's a comment on the economy, the auto business, big use of platinum, catalytic converters.
Yeah.
I don't know.
Yeah.
What do you think? Less demand.
Well, I think I actually personally don't know of a bigger industrial application of platinum compared to the exhaust for the cars. So they're all
Right.
going electric and all that. So yeah, you're right on that. I have to research it. I really don't know platinum at all. I've never traded it.
Yeah,
So I have
okay.
to.
But
but,
I know I know you're a metalhead, so I'm expecting you to do some homework.
I will do. I will do.
Stelio, I can tell you one thing about platinum, that it has been in a prolonged consolidation within a triangle, as you see, by zooming out. You see it here.
Yes.
And, obviously a breakout of this triangle is going to constitute like a major break in either direction. So having to do with the downside, I wouldn't be selling immediately because I'm also tracking this red trend line, as you see now that I drew it. I mean, I think this might also prove to be important. So I think this is exactly what your friend should be looking for.
Yes.
Either a break below, let's call it 890, or above. Now the above I can tell you exactly because this is a descending trend line, obviously. So depends on when it happens. But for the time being, I can tell you that as the rest of the metals, first of all, the medium-term trend is not there. I mean, it's like very choppy. Second of all, I have to tell you that looking at the previous trend and seeing this as a triangle, I would give it a little bit of a higher chance of breaking lower. I know that your friend probably doesn't want to hear that, but
I don't know actually.
Yeah. Okay. So
Okay.
this is what I see in platinum.
Someone's dog agrees with your call here, Steve.
Yeah, that's my dog.
Is that your new one?
Yeah.
No, that's Millie, the 5-year-old.
Okay.
Yeah. Thank you, Steve. Thank you very much for that. Thank you.
Leon is answering your question. You see, that's nice of having a community. Platinum used in catalytic converters for diesel versus palladium gas cars, fewer diesel cars, hence less demand for platinum, but platinum probably very undervalued here. I agree with your assessment because don't forget that platinum is a metal that has anyhow, amazing characteristics.
Conductive characteristics, yeah.
First of all, it's conductive. Second of all, it never asks for any reason or whatever.
I could think of a reason. A lot of women prefer platinum over gold rings.
Yeah.
Yeah, but this
and we know that creates demand.
Yeah, but this is a small part of the demand.
I know.
By the way,
stand-up routine.
Since we are on metals, I have to tell you that nothing has changed with, having to do with gold and silver. I mean, they still look that they're under pressure, but on the other hand, gold is testing this trend line at the moment. Silver is, again, reaching this area of support resistance. If you zoom out, you will see that there is no clear trend in the medium term, especially for silver. It's even more obvious.
I'm just thinking maybe a C wave here in both of them. Kind of, they're gold's giving back more than silver, but
yes,
higher low, and one more correction to the upside.
Something. I think they look so messed up, technically speaking.
No trade.
That the best thing you can do is ignore them until they become more easily readable, until they start trending once again, until they give us an indication that, okay, now I'm about to start moving one way or the other and do it strongly. Well, I mean, there is no reason to force a trade, you know what I mean?
Yeah, but, I don't like ignoring anything. And I don't like when you ignore my messages on Skype. I thought I'd just drop that in.
Can I also thank Leon for his answer? And I actually personally didn't know that platinum was used for diesel. And so many cities like London, they're planning to ban diesel cars altogether. So this is gonna reduce demand for sure. So thank you, Leon.
We've got a highly educated community, man.
Absolutely.
FACE is a place where pros come to trade.
Oh no, that's very true. And if you see some of the people we have in the chat room and their backgrounds,
It's not a hobby. It's not a hobby.
yeah, you'll understand that actually, the community has some extremely strong traders, and I'm not saying that to say it. I mean it. I'm of the person that doesn't BS. I mean, I wouldn't say anything. Having to do with the USD TRY, I was expecting a correction down to the 200 EMA. It was a little bit shallower, so there it is. It's rebounding higher, and as I said with the USD ZAR, I think you should keep looking higher. Okay, so this is what I see with the USD TRY. Abdul is offering a coffee for whoever is in London from the trading community. Abdul, if you want to put down your Twitter handle so they can contact you, I would be more than glad to share that here. If you want to put the Twitter handle, because otherwise I don't know how somebody can respond.
No looking for dates and face.
Okay, so I'm gonna.
This isn't Match.com, buddy. Come on, man. Lydia's here. Lydia's here.
Okay, so I'm going to put your Twitter handle. There's Abdul's Twitter handle. I just wrote it in the chat. Any trader that's in London, he says he's buying coffee. Okay, thank you, Abdul. Okay, perfect. So Lydia is here. I on purpose didn't cover the cable because I know that she's the cable queen. So go ahead and enjoy the interview. I'm sure that the community is going to enjoy it as well.
Nice job, Steve.
See you tomorrow, everybody. Tomorrow is a big day. And don't forget, 1 hour from now, we have the BOC. We have US home sales. Okay, that's secondary in nature. So what's the pairs that we said? What's the CAD yen and the USD yen? They're perfectly set up in case we get Canadian strength. And what's the pound CAD in case we get Canadian being weak after the BUC. Okay,
yes.
Bye-bye.
Yeah, everyone join us in Blake's Lounge after phase ends today. Lydia, what a great day to have you. I just made you the presenter. Hi, my friend.
Hey, Dale. Good morning.
Hey, what a great day to have you, Lydia. There's some energy in cable today. So what perfect timing to have you here. Everyone calls you the cable queen. Do you like that title?
I appreciate it. I've always found you that title.
It's great to have you here, my friend. So, we're interested in your views on a lot of the crosses in here. You could start wherever you want. There hasn't been an interview I've done with you that I haven't learned something or that you have not pointed my eye in a direction of a pair that I could take advantage of.
Thank you so much.
Okay, so we're going to start here with EG.
Yes, let's start with the euro. Steve mentioned tomorrow's a big day, and the euro really, let's start at a smaller time frame, has really been range bound between 88.50 and 90.50. And I have this fib on here. This is back from 2 or 3 weeks ago, trying to catch an entry, watching this thing just kind of oscillate. It's definitely range bound. I actually, for this week, expected that we would fall back into 88.50 more definitively like we did 2 weeks ago. And this is really our deciding line. It's really 88.50 to the downside, or it's 90.50 to the upside. And until we can break below either of these, it's even hard to catch the range, right? Because we're getting lower highs and we're getting lower lows. And it's difficult to catch direction.
Starting to compress a little bit.
Huh?
Compress a little bit.
Yeah, and it's coiling, right? So we're definitely getting ready for a breakout. And the question is, which one is going to have the power behind it? Is it going to be the euro or is it going to be the pound?
Do you have a bias?
My bias right now actually is I don't have a bias. I'm very
Okay. That, yeah,
I came into the week thinking that we were going to the downside further.
Yeah.
And to see the reaction right now in the euro pound with the surprise in the GDP this morning, kind of inline expectations with the CPI last week, but CPI is at 3%. So for us not to be lower, I'm really surprised. And I mean, a lot of that has to do with just the strength in the euro. The euro has just been, it's been holding pretty steady. When we see the euro rally against the pound or the yen, we've seen the euro dollar not really advancing at all because it's contending with euro strength. It's probably been one of the few pairs that are holding up against the dollar, but not really making headway. You know,
good
we're
insight. Yeah.
you know, we're not above 118, we're not below 116. It's the same
Yeah.
with the pound. We're not above 90.50, we're not below 88.50. So if there's still, clearly the market is waiting for tomorrow.
Right.
And what Draghi brings to the table. So for the euro pound, I just tell people like these lines are my lines in the sand, and we're trading a breakout and a retest of the level when this thing finally does break out.
Okay, so your style would be, we take out the range one side or the other. You don't go with the initial move outside of the range. You let it do its thing and then wait for retest of the range.
Right. And so that retest, that breakout too, it doesn't have to break out typically, especially with, I don't know, the Forex markets are just not as volatile as they were 5-10 years ago. But usually when we get these breaks, it'll be a little tentative. I mean, it might be a nice definitive break, and we'll see it in the euro pound. And yeah, exactly, a retest of the level in whichever direction, and then that's when I'd like to get in.
Okay.
And we can see that with the euro pound. I'm sorry, the pound dollar today. Yeah, exactly. So I drew these top of the week, Sunday, Monday. I drew this range. We have been range bound in the pound dollar as well for like 2 weeks, and we've been, and it's very loose range, because you see we've had these moments where we've popped above, and we've had these moments last week where we popped below. But tentatively, it's just been 32.30 and 31.30, this 100 pip range. Even though we broke below it yesterday, I thought it was a retest. You can see some of these candles popping above 130, popping around 130, and then today's GDP news, took it higher. It retested. So before I got on with you, I'm watching it. It retested it, and we won't see it in the 4-hour chart. Let's see if I take it down. See, we'll see it a little bit in the 1 hour. It retested not quite until 32.30, but 32.40. I took it, and I expect this will continue to rally.
Yeah, I want to ask you something, you know, because we keep bringing up retests in this interview today.
Mm-hmm.
Like that last chart you had up, Lydia.
Mm-hmm.
I think, in my opinion, it's almost more demonstrating more strength when it doesn't accommodate people to come back right to that range and get there. Because people were waiting for that number, and now they're not going to get it. And if they do, they better be careful. What do you think?
Yeah, exactly. Now people will chase, and that chasing phenomenon is going to make this thing move higher, especially if we see it, like accelerate through the morning. We'll see this thing.
Yeah, so you don't have to be perfect on these breakout levels. You know, if it's like within 10, 15 pips of it is good enough, isn't it?
Right. We just want to see a retest. We want to see an attempt to come back into the level. Obviously, a add or even below, but we don't want to see it below. Actually, we want to see it come to the level and really stay above it and start to move higher. So yeah, you're right. It won't ever. It's not always going to be right to the pip. Right. This is trading, so it's never going to be the exact level. But we want to see this pullback, and we want to see a hold, and we want to see it go.
Yeah, I think they're more powerful when signals when the market doesn't accommodate people in a classical sense.
I agree. And we'll see that with, let's say, let's go to the pound Kiwi then, since you're saying that. This Kiwi has been, obviously, we know the Kiwi has been weak for about 2 weeks now since their election results had come in. Even when the pound has been weak against the other crosses, the pound Kiwi has not has not managed to fall back in line with the other ones. Just really quickly, we'll see. This is it's not straight. This one's almost straight up. You see that the pound Aussie has been down last week, whereas Kiwi went up. So this pair has been doing its own thing. And just to your point, Dale, so I drew this. I drew this fib first on this breakout last week, and we never came back. We never came into the fibs at all. And I think those are another powerful indicator of trend and the power of the trend when it can't even do, when we can only attempt or manage a shallow correction.
Yeah, just sideways. It's kind of like, markets that work off overbought in time rather than price are telling you they're not. They're a freight train.
Yeah, and this was the first one, is when we broke above 87. And 87 actually had been a previous high. You can see the highs here. So that was our retest. If I can just draw it really quickly, these highs, that was our retest. So we broke above it and we came back lower.
Right.
And this is where we needed to get in. So if you didn't get in, I think this was last week at 87, you needed to get in again. It never retraced, so you draw it further, it still never retraced again. This one was a little harder to catch. You needed to draw, not this fib, but the retests are great, right? But after that, you needed to have drawn this fib, and you would have gotten a very 38.2 retracement. That was your area to get in at the start of this week, and now the start of the week was actually above 90, so this was
what a huge mover. Huge mover. Huge mover.
Pound Kiwi is very volatile, so when you catch this one in the right direction, it's very profitable.
Lucrative.
Yeah. So this one, I just feel the Pound Kiwi is clearly telling us that it's going higher. I do think that the New Zealand dollar weakness is a bit overdone, but you can't stand in the way of this weakness right now. We've broken now above 89.68, former high, back when the pound was really rallying in May. Yeah. And even though we're in this retracement, we're still in this fib on the larger time frame. I do think we have a clear shot to head towards 2, and we have the 61.8 at 1.98 coming up, but we basically have cleared resistance. And let's see, the former lows back in 2015, since breaking below that, that's actually.
You know what? Blake must have seen your chart, because you got to watch that Blake Morrow guy, because he has a 198 target as well. So great minds think alike. So anyway, that's confirmation to me that number's going to manifest someday.
Yeah, that's a big number. I have it on the fib at 198.50. So I think we're clear to go on that. We're basically bumping up against these former lows from, this is 2015. So probably this is our first kind of retest of these former lows since breaking down last year. So this will be a big time area. I don't really have a doubt that we're going to clear these 197 levels, 192.70. So I don't think that it'll be a problem to clear these levels if we just zoom in now with this kind of line mark.
That was a great telescopic look on the weekly. That was really a clean. That formation measures it too. So you have fibs at those levels. If you measure the whole width of that weekly formation you had, it's an ascending triangle. That's about what it measures. It's about. So that's really nice look.
Yeah. And we're finally clearing the top. And so let's see if we have a retest. Let's see. So this was the former top. This was the former top of that triangle you're mentioning. Everyone see the blue line here. That's 89.62.
Okay.
Come back in. So we had a retest all week, bouncing above 190. So we never got below that really. A couple stabs below. That's where you wanted to get long. If you noticed that retest, if you were hesitant like I was, we have a retest now coming in at that 192.44 level. Those are the former lows from 2015. So slight break above those, hit the my 123 extension, and now if we have this retest, we can look for a retest around 92.40, and that would be the opportunity we'd be looking for to go long.
Okay.
You can also, if you're more, I wouldn't say diligent, but if you're more conservative, like I can be, especially with the pound kiwi, knowing how it can move, even on a correction, you can draw these fibs on today's move, and a nice correction would take us into 192, 191.79. So those are your areas for trying to catch this trend. I don't think it's the end. I mean, we're healthily in the middle, though. You know, we're a couple weeks into this trend. But yeah, if your opportunities to dip, watch what it's doing today around 92.40. If it breaks below and it keeps on headed, I think you'll want to take your opportunity a little bit closer to the fib level.
Thank you, Liz.
Mm-hmm. And your stops should definitely be below 191. So you got to give this one some room. Got to give this one a little bit of room.
Let your trades breathe, right, Lydia?
Yeah. Oh yeah. I mean,
so you know, if you have to use wider stops, you just go small.
Exactly. Or you need a new entry, right? Like maybe
Right.
if your stop is too wide for your position, then you need to move your entry some. That's how I take a look at that.
Yeah.
So yeah, everyone should always be reviewing your risks in terms of making sure, because sometimes you need 100 pip stop, but if it's too much for you, you need to adjust. Either
Well, what's the average ATR in pound kiwi? Do you know?
I don't know. I mean, I would
Okay.
I would say it's definitely shrunk over the years, though.
Okay.
Yeah.
I bet it's close to 100 pips.
I was gonna guess 200, but we've had these
200, okay.
tight consolidation periods
Right.
for longer, right? Like
Yeah.
we get these moves, but we get a lot of this tightness. So
Right.
100
Right.
sounds about right, but I was gonna say 2 because this one can move. This
Yeah.
one's already up 270 pips today.
So I like to say, Lydia, if you can't be wrong for a day, how can you be right for a week?
Oh, I love that quote. Yes.
So yeah, you know, I think you have to be willing to risk a daily range to take a trade. Just my theory.
I don't disagree with that. I really don't disagree with that. The way I tackle that is trying to have the best entries I can have. So and everyone says you can't time the markets, but I always say in Forex, the better you can time, the better you'll do. So you know, it's not like stocks. Stocks, you can't time the market in stocks, but your timing is not as
okay, that's the first Finkleyism I've heard. You're gonna start a list now, I think. Okay, I like it. So how about Guppy? Guppy looks like you know, there's some
man.
Yeah.
I left my fib on because this trade just was spot on for me this week. It's the only thing I caught.
Beautiful.
And it came into, so I looked at this and I was okay, it gapped up. And then it came into the fib so nicely yesterday. This tail here, right here is where it got in. I positioned against the 50% fib. That's like my favorite setup is the 50 fib with a stop below the 61.8. That's just classic fib setup for me. Targeting the 123. I mean, it was classic. This is textbook setup. But the larger picture is, and looking for to get back in, because the larger picture on the pound is this break above 148. That has been, I think we've been waiting for that for months. And we've had these moves down, but we've just kept getting these kind of higher lows. And finally we got that resolution back in September, where we finally got a break above 148. It's the first break we've had all year above 148, almost in 2 years. Or I'm sorry, almost in a year, but definitely all of 2014 we were capped by 148. 2017 we were capped by 148. We got that break above in September. We got this retest. Got that retest lower at the beginning of the month, and
what a shakeout move that was. Yeah.
Yeah, we have not looked back. So I love the setup this week. I mean, it was just fib perfect, right right into the target. But
So looking at your weekly, knowing what you just said about 50% and 61.8, I'm assuming that 59.44 is viable.
yeah, 160 to me is where this thing is headed.
Okay, great look.
We can clear that last month's highs above 153. Yeah, I think 160 is a clear target long term. Definitely headed into the year end.
Okay. Any other crosses you want to cover? Have we covered them all?
Let's look at the CAD. I think the CAD has been very interesting given the interest rate hike surprises out of Canada, and the fact that we are at new highs. I think is interesting. It's speaking to this kind of dollar strength, or not dollar, this pound strength that is kind of has been much more clear against the crosses than it has been against the dollar, and even the euro. It's been struggling against those two major currencies, but the crosses have been a little bit more clear. And despite the Canadian dollar, I think a lot of folks expected us to be lower because of the interest rate hikes. And so I mean, I think that this one's just going to follow with the rest of the pound strength. I also think that the market might be feeling like interest rate hikes are now priced in and we're done. So for, it's another lesson, like once the fundamentals happen, it's not really tradable anymore. So if you're trying to short this thing or trying to figure out how to get short, you need to change your mindset and think, well, maybe there isn't any more interest rate hikes in the pipeline. And this might be the reason why we continue to rally. So I think the pound CAD is clear to go to 170. And this is kind of a smaller fib, but if we ignore this smaller fib really quickly, we have a lot of room to retrace. Again, we had that pound rally, pound CAD, because of the interest rate hikes. This one has not managed to rally. And if you can think of maybe laggards in some of these, pound CAD is certainly one.
Could play catch up.
Playing catch up, and with plenty of room to go, not just in price until we get to the top of that rally, mid-year rally, but also in terms of momentum. I mean, we're right here. We're just got above 50. We're newly bullish on the weekly chart. So this thing really has a lot of room to run. So if you're looking for a good swing opportunity, this is probably one of the better ones, just because it's playing catch up. And then we'll see its breakout move like we're seeing in the Kiwi. But this one still has room to run. So if we look, this was our former high, and we're now retesting. You can see it. It's a little bit more difficult to see on this chart because we're right at the top of it. But if we look, and this is just the larger, this is the fib move on the daily chart. So my initial target would be 170.30 if I was playing off of these fibs. But knowing, you can take a little bit of profit here. We'll probably come up with resistance at this whole number like we've done, back in June at 170. But really, we're looking for 170 to definitely break. We have room to go. We've broken above the highs from September. We're retesting right now. So if you're looking for a place to get in, this is an opportunity. This is the hourly chart. So we're looking for a place to get in. You can even draw a fib on today's move to see if this thing has the potential to move lower. But I mean, quite honestly, this is looking like a great entry. Put your stop below 167.50. No buy, sell, or hold. But this is classic. Like we've been saying all day, is just these breaks and these retests and how to catch these trends without chasing.
You're a natural teacher, Lynn. Really are. So I think, did we cover, someone's asking about pound Aussie. Did we, is that similar to CAD?
Similar to the Kiwi.
Yeah, okay.
Yeah, in terms of, so not as much, well, let's take a look at the weekly, but not as much catch up, I'd say. So we've broken above the 61.8, nice reversal signal. We're headed to 176. Again, the mid-year rally on that pound. Let's zoom in a bit. That's the weekly look. This too is coming back. Kind of, you can look at the. So this one is a little bit different. This one slammed into resistance. Let me see if I can check this out to a daily. So this one slams into resistance at 172, and we're falling back a bit. So not the kind of retest I'd like to see, right? We would like to see this break above 72 and then test and retest these former highs. So we can look like it might be coming into this high back from July. This one, I wouldn't try to catch on a retest because it's not as classic as a resistance break. It's actually,
it hasn't proven itself like the
right.
others.
That's it. It
Got
hasn't proven itself at all. So that one we would definitely want to see that one come into the fibs a bit on a correction. Now, which means we may or may not get it, right? And it would be nicer to get a retest of this 170.10, 170.13 level. That has been where we've been seeing resistance. See it for the last couple weeks. 170.10 has kind of been that line. If we could get a retest, I mean, we're 150 pips higher. That would be the retest level I'd like to see, unless we can get above 72, or again, draw that fib. But that fib, let's see, draw a fib over today's move. And
that's an interesting technique on, like, a breakout move to do fibs on it. Like a big, huge, kind of hurrah move that you just use that wave and measure fibs for intraday or maybe the next day for an entry.
Right, that's right. And that's really as long as it's valid. It's intraday to 24 hours. You just want to see if this thing will come in, if it corrects. So we're not trying to catch top. So people will say, oh, this is a retest. Not really. It is testing these former highs. And if we see it turn around from here, okay, great. This wouldn't be where I wanted to catch it, just because, like you said, it hasn't proven itself. It didn't break resistance, but it did break this resistance at 170. So the retest, that would be a little bit more assured if we see it hold, come back into 170 and hold. And I think over the entire rally, that 170 level is a fib. So that would be more, and it seems like it's so far away. So don't chase. I would say go. We've seen other opportunities that are a little bit better. But this one is definitely keep your eye on 170 if we have a correction there. And for today, we're looking to see if it can break above or below 170, 150, just to see if it's really retested its former highs. But probably one of my least favorite for the day compared to some of the other things we've seen.
So you want to show your website and how people could reach you, Lydia, and what services you offer?
So I'm now an RIA, investment advisor, and our website just got redesigned. So check that out as it slowly comes up here. I still blog at faithmightfx.com. So you can check that blog here. This one here is the company blog. We're excited about this redesign. It's been 3 years in the making.
What's that picture of, that scene right there? Where is that?
This scene is the Pacific Coast, right around, that's in San Francisco, near beach. So this is a private, no, it's okay. It's like a private beach. So we took this hike down and we had this whole beach to ourselves. You can't see it yet.
Cool.
This is gorgeous. So for me, this is just like serene. This is really like finding your hidden treasure. It's actually called Pirates Cove.
I like that. Yeah.
So it became one of my favorite scenes. Went for my birthday a couple years back.
Okay.
Yeah. So yeah, check that out. I also do still mentor Forex students or students who are looking to do trading in addition to their investing, and that is more one-on-one type of mentoring. You can find that on the blog, faithmightfx.com. You can find more details about that.
How do you do that in a chat? You do it in a chat room or over Skype?
Yes, we do it over Skype. We actually do Skype or Hangout, and we get to know each other. We get to know my style versus your style, and then I I fill those holes. I fill those gaps. So for some traders, it's a complete learning experience. For other traders, it is somebody to bounce ideas off of.
It's a tune-up.
Tune-up, right?
Like you bring your car in for a tune-up.
You know, I
So
think we all know this, but a lot of newer traders don't realize that the most successful traders are not trading by themselves. They have somebody, they have people, which is why we all flourish on Twitter. That investing is not a sport that you should do alone. You really do want to have someone someone that you're trading with, or you can bounce ideas off of, whether it's a coach, a mentor, etc. So I offer some of these services now, and you can check out Learn with Lydia to find out more about the mentoring and coaching or teaching classes. Investing with me is the RIA there, and this is you can find me.
So regarding the RIA, and last time we talked, you're still being patient, waiting for a pullback to commit fresh money to.
Right, and we're actually looking at individual stocks or individual investments. But as far as indices, I mean, we've been holding on to the indices. I think most have or should be. There's been no reason to sell, but yeah, like we said last time, it's just been difficult to put fresh money to work. So we're still patient with that. We've actually been looking at other opportunities instead. As we still, wait for this market to pull back.
Discover gravity. Sir Isaac Newton is doing a headstand right now as he looks at the Dow chart.
We're all kind of floating right now.
It's like champagne. Someone put a picture of champagne bubbles bubbling to the top of the glass. So, Lydia, thank you for all your great looks again, and points and fib numbers and everything today. And besides all the great looks you provided today, your picture on Twitter, I like the new look, if I may say so. So, yeah,
I need to update that one too, but thank you so much.
Yeah, so thank you for the looks, and you look beautiful. And I wish you and all the different arms of your business model to just keep growing like a mushroom, my trading warrior sister.
Thank you so much, Dale. Bless you. Thank you. Thank you,
Lydia.
Thank you, everyone.
Back at you. Lydia Idem Finkley, everybody. So we'll see everyone for tomorrow. Good hunting. See you in the other trading room for the CAD news. And remember, most of all, don't just count your pips, count your blessings. See all you warriors tomorrow. Adios. Thank you, Lydia.
Thank you.
You're welcome, Simon. You're welcome, Tom. She is very good, Kevin. I concur.